Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, May 17th, 2024. Let's take a look at the big charts. I'm going to start with the weekly chart here just to make a couple of points. I mean, we are so far off either of these marks, but I just want to, number one, mention that, by one definition anyway, with respect to this channel top at 224.26, we've remained in roughly a one-year bear market. As since that July high of last year, we've been in a lower low, lower high dynamic. And in fact, it was just a month ago that we tested, at the time I didn't consider this to be a significant support level, but it did manage to contain selling pressures for the month of April, and we came off of the 139.96 long-term trend line. Well, what really sparked, the rally, and I'm going to jump to the daily chart right now, was a series of news events. We had a earnings report on a Wednesday that gapped us higher, back above this low area from just days earlier. And then a couple of weeks ago, we had the China announcement for automated driving, and that gapped us above this channel top at 167.70. But, we slipped back below the channel structure, closed below it, closed above it. It's kind of this meandering quality right now, but the overall dynamic is still longer-term bearish. That doesn't mean that we won't see 222.91 in the coming month or two, but it is a stair-step, if you will, proposition right now. I don't see a support level that I would like you to buy or to lean on aggressively in anticipation then of 3 to 5 weeks or 1 to 2 months bullish rotation up to 222.91. It is pretty stair step right now. And what I mean by that is it would be a settlement today above 178.33 that would then indicate by the end of next week, perhaps 1 to 2 weeks anyway, 198.86. And it then is 198.86 that we would need to settle above to then signal that 222.91 long-term resistance level. So yes, closing above 178.33 today is your goal-long strategy if your time horizon is 1 to 2 weeks or 3 to 5 days, then expecting 198.86 where profits can be taken, and you could set a short position here as we move into June trade. Perhaps we could fall away again. And finally, once again, it would be a settlement above 198.86 that would then clearly indicate 222.91 as the next 1 to 2 week target. And that is kind of the way I've been describing the market for the last week or so. 178.33 today can contain session strength, and below which 167.70 is attainable today, where we can bottom out on an intraday, possibly daily basis. Holding below 178.33, however, as I've been saying, will keep channel support that is presently at 158.72 in reach by the end of next week, perhaps. This is dropping at a pretty good pace, so, it does sort of stretch out a bit, but we are just below the 178.33 level, and below which channel support, once again, at 158.72 should be considered attainable by the end of next week. Downside today, 167.70 can contain intraday selling, and I'll say that closing today below 167.70 does allow 158.72 within 1 to 3 days. But once again, we closed below this structure about a week ago without any downside follow through, and I don't think it means a whole lot to the downside or the upside right now. But in terms of 167.70, I do like 178.33 as a level that can be sold on a daily basis and on a 3 to 5 day basis, expecting bearish rotation perhaps back to the 158.72 formation. And inversely, if we were to close above 178.33, I see 198.86 as a 1 to 2 week target where we can place a weekly, possibly monthly high. I think it's about as simple as that. Is there anything else to mention? I will say that if we push through 178.33 today, this 5/8 Fibonacci over the last couple of weeks, 2-3 weeks, in reach on an intraday basis, and closing above 178.33 does signal 198.86 within a matter of 1 to 2 weeks. So 178.33, a solid, valid pivot point, below which we can fall back to 158.72 over the next 3 to 5 days by the end of next week, and above which 198.86 expected. Now, over the coming week or two, if we close below 158.72, that does indeed signal another test of that long-term trend line at 139.96. But I'm not a big trend line technician. I just, I like speed lines and channel structures. I think they're more reliable. They're more accurate in terms of identifying trend. But I do respect 139.96 as a sell signal upon settlement below, because I think the entire world will be watching that one. Trend lines are easy to spot. So on the way down, yes, let me articulate this, that if we close below 158.72, 139.96 in reach expected within a week or two, where certainly we could bottom out, for a day, possibly for another week. But I suspect on the next attempt, it's likely to give way. And so what am I really saying? I think what I'm saying here, and I'll use this as our image, that given the longer-term one-year bear market that I see still in play below 224.26, that 101.81 may still be, our big picture objective. But I wouldn't set a short position on for 101.81 unless we were to test 224.26, and then a longer-term option traders I think can reach for 102 or 100 strike out of the money puts that don't expire for at least 6 months, maybe a year out. Until then, in terms of a target for 101.81, I think that would reliably be below 139.96. It's about as simple as that. But getting back to the day, let me just articulate one more time. Closing above 178.33, go long over the weekend, stay long up to 198.86, quite possibly by the end of next week. Until then, 178.83 can be sold for the day traders, and into next week. You can play the short side down to 158.72, where we can bottom out on at least a daily, possibly weekly basis. I might bump this up to a 3-star support level as we continue into next week, just because this is now becoming kind of a longer term structure, 2 weeks and counting. I think that pretty much summarizes it for Friday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Tesla report. You have a great weekend.